Candlestick patterns are fundamental building blocks for price action trading. Its usage traces back to 18th century in Japan and was used for rice trading. In today's world, we use single candlestick pattern, double and triple candlesticks patterns. This video is going to be about single candlestick patterns. There are six key single candlestick patterns. They are Marubozu, hammer, shooting star, hangman, inverted hammer, and doji. The first one is Marubozu candlestick pattern. Marubozu means bald in Japanese. So this is a huge candle with a big body, and it will have no wick or a very small wick. This strong candle means that the price action is predominant on the side of the candle. So if the candlestick is green, then it means that the buyers are predominant, and if the candle is red, then it means that the sellers are predominant and strong. So the green candlestick is called bullish Marubozu, and the red candlestick is called bearish Marubozu. While doing price action trading, you can look for bullish Marubozu near support zone for bullish reversal trade, and you can look for bullish Marubozu near the breakout zone. It generally cuts up the resistance zone and it gives a good breakout. Similarly, for bearish Marubozu, you can look at near the resistance zone for bearish reversal trade, and bearish Marubozu will also be present for breakdown trades. So it will cut down the support zone and it will give a short trade. This is a HCL Tech chart in daily time frame. The lower left corner is marked with number 1 and it indicates the support zone, and which is formed around June 2024. And then the next level of support is formed and in the area marked as number 2, and it is formed from July of 2024. So if you see later around August, there is a bullish Marubozu candle that has taken support from the support zone, which indicates that the buyers are very strong in this zone. And then if you go to the top, you can see an area which is a resistance area marked as number 3. And below that area, you can see a bearish Marubozu which has formed, and this indicates that the sellers are strong in the resistance area. And you can also see a orange line where it has acted as support during September, October, November of 2024, and then the same line has acted as resistance during the January, February time frame of 2025. So there you can see that the bearish Marubozu candle marked as number 4, it has pierced through the support zone and it has given a breakdown trade. And you can also see another bullish Marubozu which is taking support around April time frame of 2025, and this also reiterates that the buyers have become strong around this 1300 levels. Hammer is another important candlestick pattern. The candle will be in the shape of hammer with a long tail. The body of the candle can be around 20% of the overall candle length, and there can be a small wick on the top of the body, which is also called the head. The candle color can be either green or red, it does not matter. The hammer candle can be formed at any places of the chart, but it works effectively when it is formed near the support zone for bullish reversal trades. This chart is for Jubilant Food and it's in a 1-day time frame. You can see that there is a hammer candle near the support zone of around like 550 levels in the June, and then the market has respected the support zone in the month of July, and from mid of July the market has went up from the support zone until mid of August or so, and then there has been a small pullback. At the end of the pullback, you can see that there are a couple of hammers which are formed during September, and after that the market has went up further to 700 levels. And you can see that from October the market or the price of the stock has went down, and in November you can see that the price is back to the support zone, and from there are two hammer candlesticks formed, and then the price has went up again. Next one is shooting star candle pattern. Shooting star is similar to hammer, but it's upside down of hammer. So it will be having a long upper wick and a small lower wick. The body can be about 20% of the overall candle length, and the candle can be either green or red. The color doesn't matter. The candle can be formed in any places of the chart, but if it is formed just below the resistance level, it is more effective, and it conveys that the resistance zone is strong and bearish reversal trades can be taken from that candle. This is Jubilant Footworks Limited chart in daily time frame, and you can see that there is a resistance zone formed around 800 levels, and just below the resistance zone there are a couple of shooting star candles with a big upper wick and a small lower wick. So this indicates that the resistance zone is strong, and you can see that the market has went down after these candles, and the market has went down until end of January or so, and again in February there was a small pullback. That pullback has also not worked, so the market has went down from that pullback level of 750, and you can see that there are a couple of shooting star candles at that level as well, which is formed in the month of February. Next one is Hangman candle. Hangman candle is the hammer candle that appears in the resistance zone. So hammer candle will be effective when it appears in the support zone, but hangman appears in the resistance zone. Next one is inverted hammer. Inverted hammer is the same shooting star candle, but it appears in the support zone instead of resistance zone like shooting star. So based on the place where it appears, these two candles will not be as effective as hammer candle or shooting star candle for price action trading. Next one is Doji. Doji means indecisiveness. Here the buyers and sellers are of same strength. So the body of the candle will almost be like a line, or it will be very small, and the color of the body can be either red or green. It does not matter. Doji will be formed anywhere in the chart, but it is more effective when it forms near the support or the resistance zones. So you can look for Doji and a Dragonfly Doji near the support zone for bullish reversal trade, and you can look for a Doji or a Gravestone Doji near resistance zone for bearish reversal trades. And this is a bell chart in a weekly time frame. You can see that in October 2024, a doji candle has formed just below the resistance zone, and from there on the price of the stock has moved down, and in December you can see that there is a gravestone doji formed, that is also like little below the resistance zone, and from that level the market or the price of the stock has moved down. And you can also see that in the month of February there is a couple of doji formed, and that has formed the support level, and from there the market has moved up. So this is about single candlestick patterns. I hope this video was useful for you.